when the biggest money in the world is draining the exchanges and the central banks are buying it, why don't people see this? They certainly saw it when Silicon Bank failed and Signature Bank failed, but I guess the banking system is okay now. Well, what happens when the next bank fails? What happens if one of them is bailed in and the people freak out in a matter of...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine turning on your favorite financial news outlet to discover something truly jaw-dropping. The price of silver has defied all odds and expectations, soaring to an incredible $4,208 per ounce in 2024. How did we get here, from a metal commonly overlooked, to one stealing the global spotlight and shaking the foundations of precious metal markets worldwide? Stay tuned as we dive deep into the insights of Andy Schectmen and unravel the critical factors behind this monumental rally. From unprecedented demand in cutting-edge technologies to shifts in global economic policies, we're uncovering the story of silver's remarkable ascent. Make sure you're subscribed, because you won't want to miss a moment of this groundbreaking journey into the future of silver.
Since Thanksgiving. So you got December, January, February. So we're going on 3.5, 4 months, maybe even longer, where actually we can probably even go back to late summer, early fall, when the U.S. Mint dumped 4 million Silver Eagles on the market. For the last several months, maybe 6 months, that's been one of the things I've been consistent in saying as well. The contradictory nature of what I see happening on the upper levels with the mines and the mints and the big epicenters of metal being bled dry slowly and methodically, quietly, not to raise too much attention. The LBMA, the COMEX, even the Shanghai Exchange, the backdooring out of SLV and PSLV and all of the ways in which we are seeing, even now with arbitrage, where Shanghai is listing the price higher in Shanghai than in London or in the United States. And, you know, these are sophisticated investors who have access to all of these platforms that are bleeding dry the exchanges. At a period of time where this country's lost its flipping mind, at a period of time where the BRICS coalition is growing legitimacy and scope and size, and I wonder to myself, what am I missing? I mean, where is everyone? And maybe it's NVIDIA going to the moon. Maybe it's the bull crap that we get out of the Bureau of Labor Statistics and the talking heads that say, oh, it's a soft landing and inflation's under control, and all of this nonsense that have people anesthetized into believing that, oh, you know, this is the U.S., everything always finds its way to work itself out. At the same time, the biggest money in the world is telling us a different story. The most sophisticated, well-informed investors in the world, the central banks, are on a buying spree that the world's never seen. That ought to tell you right there. I mean, if that doesn't tell you, then you're not really understanding the way that this works, that the big money is always 2, 3, 4, 5 steps ahead of the public, and they do it when no one else is looking in that direction. That's how they position themselves, and do so in a manner that allows them to achieve their goals. They have all the money, they control the media, they control the narrative, they control the markets. All of these things aids their ability to reposition, and I'm wondering where...
Silver's journey to its current standing in the precious metals market is nothing short of fascinating. This remarkable voyage starts with a glance back at history, where silver, often overshadowed by its counterpart gold, has been making waves quietly but consistently. To truly appreciate the story of silver, we must revisit the year 2020, a pivotal moment when the price of silver rose above $20 per ounce for the first time in 4 years. This wasn't just a fleeting moment of glory, it marked the beginning of a new era for silver. Since then, the metal has consistently traded above this level, even touching peaks as high as $29.59. What's more intriguing is silver's relentless testing of the high $20s, showcasing its resilience and potential for growth. Now let's talk about a name that's synonymous with bullish predictions on silver, Keith Neumeyer, the CEO of First Majestic Silver. Neumeyer isn't just another executive in the mining sector. He's a visionary, foreseeing a future where silver breaks free from its historical pricing trends. His bold claims of silver reaching triple digits are not baseless. He draws parallels to the dot-com bubble of 2000, suggesting that, much like the market corrected itself post the bubble burst, a similar fate awaits, propelling commodities, particularly silver, to unprecedented heights. Neumeyer's optimism isn't unfounded. He points to the massive deficit in the silver market, a result of skyrocketing demand across various industries, from electric vehicles to renewable energy technologies. All these sectors share one common need: silver. This demand, coupled with a decrease in silver production, sets the stage for a significant shift in silver prices. Moreover, Neumayer challenges the traditional view of silver as merely a follower of gold. He argues for the recognition of silver's strategic value, given its indispensable role in modern technology. His assertions point towards a future where silver is not just another precious metal, but a critical resource driving technological advancement. As we dissect Neumeyer's predictions and the underlying reasons, it becomes clear that the journey of silver is intricately linked with broader economic and technological trends. The anticipation around silver breaking the $30 barrier and Neumeyer's audacious forecast of triple-digit prices underscores a broader narrative of change within the precious metals market. In this journey, we're reminded of the critical importance of staying informed and proactive. As silver continues to carve out its path, defying expectations and setting new benchmarks, it serves as a powerful reminder of the dynamic and ever-evolving nature of financial markets. The story of silver is far from over. It's just beginning to unfold, promising a future filled with potential and unprecedented opportunities. So as we delve deeper into this narrative, remember, the rise of silver is not just about numbers on a chart. It's about understanding the forces that shape our world. From technological innovation to economic shifts, silver's ascent offers valuable insights into the future we're moving towards. Stay with us as we continue to explore this fascinating journey, and don't forget to subscribe for the latest updates on the world of silver and beyond.
That's what I've been saying. I believe it. I believe it. Dunnigan, I believe it. Look, Janet Yellen made a comment not too long ago saying that the dollar is used as a tool for policy decision. And what the dollar is a tool of sanctions. And she knows very well that by weaponizing the dollar, the consequences are real. And I keep telling everyone, how many times have I said Jared Bernstein wants to lose the reserve status, the lead economic advisor to the U.S. government? So what do you do to lose the reserve status? Well, you weaponize the dollar, you sign an executive order to go green, the linchpin of the dollar hegemony. And by weaponizing the dollar and doing it in a way that is wholly hypocritical, the way the rest of the world would view it, is enough to light the fuse. And then you destabilize this country for everyone to see, not just us here who are disturbed by what we see around us, but the rest of the world. That's not lost on them. And they say, what the hell has happened to that country? And it makes it much easier for them to unite against a country that's lost its bearings, that is no longer the beacon of truth and liberty and justice and freedom, when there are questions if there's a two-tiered status of justice and open borders and the lawlessness and the money printing and the wokeness and all of the things that this country is literally, our culture has been whitewashed. I think it makes it much easier for them to pull this trigger. So I do think that's how you do it. And that falls right into the hands of the number two advisor, Lael Brainerd, modern monetary theorist, ran point for FedNow, helped develop the CBDC with MIT, that Biden fast-tracked by executive order. And so when you talk about could this be done, Richard Russell, God bless his soul, always said the Fed has two choices. This was 20 years ago, inflate or die. And he meant it. Well, here we are. Look, in 2008, the national debt was $17 trillion. We've doubled it since then. We're in a way worse position than we ever were then. So what is their options? Inflate, default. And that's what we've been seeing. Should we raise rates? Should we not raise rates? Should we pivot? Because if you go too high, the market blows up. Everything blows up. If you inflate, well, then ultimately it leads to much higher inflation and higher rates. Everything blows up. We're at that point where we're damned if we do, we're damned if we don't. So how about option 3, find a villain? And that villain would be those countries that pulled the plug on the dollar and its hegemony. Well, geez, they were incentivized through sanctions and through the threat of sanctions and through the admission that, hey, we're going green. We don't need you anymore. We don't need the petrodollar anymore. So do I think that they could do it? Yeah, because in that moment, as I've said on your show 100 times or more, when the countries around the world says, look, we don't want your debt anymore, you're adding $1 trillion every.
As we delve deeper into the story of silver's unprecedented rise, we encounter a critical piece of the puzzle: the ever-widening gap between supply and demand. This imbalance is not just a temporary market fluctuation. It's a reflection of deeper, structural changes in our global economy and technological landscape. Let's dissect the supply side first. Mining production of silver has faced numerous challenges, including depleting ore grades and the logistical complexities of bringing new mines into operation. The Silver Institute's report shed light on this dilemma, revealing that while demand for silver surges, production has struggled to keep pace. This is not just a matter of operational efficiency, but a stark reminder of the finite nature of our planet's resources. As Keith Neumeyer pointed out, the consumption numbers for silver, driven by our insatiable appetite for technology, starkly outweigh what the mining sector can supply. In 2022, the mining sector's output was estimated at around 800 to 825 million ounces, while consumption rocketed to between 1.2 and 1.4 billion ounces. This disparity is staggering and underlines the urgency of the situation. Now let's turn our attention to the demand side of the equation. The technological revolution sweeping across our world is silver-intensive. From solar panels to electric vehicles, the green technologies that promise a sustainable future are heavily reliant on silver's unique properties, such as its unparalleled electrical conductivity. This insatiable demand is a testament to silver's critical role in our transition to a cleaner, greener world. Yet, it also highlights a looming crisis. Can we continue to meet this demand without a significant increase in supply? This supply-demand mismatch is further exacerbated by investment demand. As uncertainty looms over global economies, investors increasingly turn to precious metals as a safe haven. Silver is no exception. Its dual appeal as both an industrial metal and a store of value makes it particularly attractive in turbulent times. This investment demand adds another layer of pressure on already strained supplies, pushing prices upward. The narrative of silver's rise is thus a complex interplay of diminishing supplies and burgeoning demand, underscored by the metal's pivotal role in both the technological and financial sectors. It's a story that raises important questions about sustainability, resource management, and the future of our global economy. As we continue to navigate through this narrative, it's crucial to remember the broader implications of silver's journey. It's not just about the potential for investors to reap significant rewards. It's about understanding the challenges and opportunities that lie ahead in our collective quest for a sustainable future. Stay tuned as we explore more facets of this evolving story, and don't forget to subscribe for the latest insights and analysis. Together, let's uncover the future that silver is shaping for us all. The journey through the world of silver brings us to a crucial intersection where global economic trends meet the metal's intrinsic value, casting a spotlight on the gold/silver ratio and its significance. This ratio, which measures how many ounces of silver it takes to purchase 1 ounce of gold, is more than just a numerical curiosity. It's a barometer of economic sentiment, investor behavior, and the relative valuation of these two precious metals. Historically, the gold/silver ratio has fluctuated widely, but in recent times, it has reached levels that suggest silver is undervalued compared to gold. This disparity becomes particularly interesting when we consider Keith Neumeyer's anticipation of a decoupling between gold and silver prices. Neumeyer's forecast hinges on the belief that silver will not only catch up to gold, but could, in fact, see an explosive increase in value, driven by its unique industrial and monetary roles. The reasoning behind this potential decoupling lies in the very nature of silver's demand. Unlike gold, which is primarily a monetary and investment metal, silver has a significant industrial demand component. This demand is poised to grow exponentially, driven by the metal's critical role in emerging technologies such as solar panels, electric vehicles, and 5G technology. The global shift towards renewable energy and electrification of transport systems underscores a future where silver's industrial demand could dramatically outpace supply, potentially leading to a revaluation of its price relative to gold. Moreover, the ongoing geopolitical uncertainties and economic shifts play a significant role in shaping investor sentiment towards safe haven assets. In times of inflation, political instability, or economic downturns, both gold and silver see increased demand. However, silver's smaller market and lower price point make it more volatile, and to some investors, more attractive for speculative gains or as a hedge against inflation. The gold/silver ratio, therefore, is not just a number, but a narrative in itself, telling the story of changing economic landscapes, technological advancements, and shifting investor priorities. If Neumeyer's vision of a future where silver breaks free from its historical price relationship with gold comes to pass, it would not only mark a significant turning point in the precious metals market, but also reflect broader changes in the world economy. As we ponder this potential future, it's clear that silver's journey is intertwined with much larger forces at play. The dynamics of supply and demand, technological innovation, and economic policy all converge on this shiny metal, making its story a fascinating lens through which to view the changing world. So as we continue to explore the depths of silver's potential, let's remember the broader implications of this journey. It's about more than just predicting price movements. It's about understanding the forces that shape our world and how something as timeless as silver can find new relevance in an ever-changing global landscape. Stay with us and don't forget to subscribe for more insights into the fascinating world of silver and beyond.
Real interest rate environment, a positive real interest rate environment, gold has done very well. And I think that's the market's way of saying that they see inflation being a bigger problem than the Fed is leading on to. And we've been saying that for a long time, too. So I guess what I'm simply saying to you is that when you look at the other markets reaching all-time highs, it's on the back of amazing optimism and enthusiasm and you could say irrational exuberance. And yet gold is quietly reaching all-time highs on the heels of tremendously poor fundamentals that would only, I believe, add fuel to the fire as people start to wake up to this. I think the potential for gold to go much higher is real. And look, anyone in this market, my parents have a dog. My parents have a dog that they rescued from the pound. And it took a couple years for me to be able to pet the thing without it screeching. And because I think it was hit when it was from its previous owners. It was abused. And that's how the people who are in this market feel. They're waiting to be smashed. They're waiting for the other shoe to drop. But we have broken through resistance. There is none at this point above. Where does it go? Don't know. Is this the beginning of the move that we've all been expecting? I don't know. But I will tell you that when you see the central banks buying as much as they have, something we've been very consistent in saying, when you see gold rising in the face of bond prices that are falling, meaning interest rates are rising, it's rising in a real interest rate, positive real interest rate environment, it's very big. And when you see a market that, as we've said how many thousands of times, you and I was listening to Matthew Piepenberg talking about this with Elijah in his last interview with you just the other day. He said the same thing, 0.5% allocation. So nobody owns it but the central banks, the most well-funded and well-informed traders. The industry has been left for dead with virtually nothing in exploration, and the mining shares are at their lowest level ever, disconnected from the price of gold. The fundamentals would say that this is something that shouldn't be reaching all-time highs, yet very quietly, as everyone is fixated on NVIDIA and on Bitcoin, gold is making all-time highs. Where does it go from here? I guess we will see. But I would tell you that I am very bullish ultimately as for where gold ultimately ends up, but I don't expect it to be a straight linear line. It never has been. But maybe, just maybe, I'll throw it out there, maybe this time it surprises us. We're up $130 or so over the last 2.5 trading days. That's not a trend, but it is the beginning of one, perhaps. Let's see where it brings us at the end of this week. And with a sustained rally, I think this is something that people should look at and understand that maybe this time it is different. Maybe this time it is different because of all of the things that we've talked about, whether it be the craziness here at home, the open borders, the election, the Justice Department, the lawlessness, the money printing, the craziness. Or maybe it has a lot to do with the weaponizing of the dollar, or the fact that our brain-dead Secretary of Treasury goes to Brazil in Russia's backyard, part of the BRICS, and says, we need to confiscate those assets, not just freeze them. We need to confiscate them. And the hubris, the idiocy, the flat out stupidity of the Secretary of Treasury telling the world in Brazil, a member of the BRICS, that we need to confiscate those assets, not just sanction them. We need to use it to rebuild the Ukraine. I mean, if that isn't a shot across the bow of the BRICS, if that doesn't cement the rallying cry, I don't know what does.
In the intricate web of global finance and commodity markets, silver's saga takes an intriguing turn as we explore the murky waters of market manipulation and the pivotal role banks play in the precious metal sector. Andy Schectmen, a seasoned observer of the metals market, has boldly shed light on a subject often shrouded in whispers and speculation: the manipulation of silver prices by major financial institutions. Schectmen's insights reveal a complex game of power and influence where banks, wielding vast resources, have been accused of suppressing silver prices through the paper market. This practice involves the issuance of contracts that promise silver delivery without necessarily having the physical metal to back those contracts. Such actions can artificially inflate the supply side of the equation, putting downward pressure on prices. This isn't just a matter of market dynamics, it's a critical issue that touches on the very integrity of financial markets. Schectmen points out that if miners and other key players in the silver market started withholding their metal from these banks, it would introduce uncertainty about the actual supply of physical silver available. This could significantly curtail a bank's ability to manipulate the market, as the risk of not being able to deliver physical silver would deter them from issuing unfounded contracts. The implications of these practices are far-reaching. For investors, understanding the distinction between the physical silver market and the paper silver market is crucial. While the physical market is governed by the tangible supply and demand for silver, the paper market can be subject to manipulation, potentially leading to price distortions that do not reflect the true state of the market. Moreover, this discussion raises questions about transparency and regulation in commodity markets. The ability of a few large players to potentially manipulate prices underscores the need for more stringent oversight and mechanisms to ensure market integrity. For silver, a metal with both industrial and investment appeal, such manipulations can have real-world consequences, affecting everything from mining companies' profitability to investors' portfolios. As we delve into this aspect of silver's story, it becomes clear that the journey to $4,208 per ounce is not just about economic fundamentals or industrial demand. It's also about navigating the complex interplay of market forces, where transparency, regulation, and integrity play critical roles. Schectmen's call for a more honest market is a reminder of the need for vigilance and advocacy for fair practices in the financial world. In wrapping up this chapter of silver's narrative, let's ponder the broader implications of market manipulation, not just for silver, but for all commodities. The health of our financial system relies on trust and fairness, underscoring the importance of ongoing dialogue, reform, and vigilance in safeguarding the market's integrity. As we continue to explore the multifaceted world of silver, stay tuned for more insights. And don't forget to subscribe to stay updated on this ever-evolving saga.
Look at the difference between, like, for example, NVIDIA and Bitcoin versus gold. I mean, you see massive bullish sentiment in both of those other two areas. You see nothing but positive news stories and FOMO that is just everywhere you look, and markets that defy the laws of gravity. It's something that that is almost impossible to ignore. Even people who understand that, professional traders would never touch a market that's going straight up like that. Yet you have FOMO everywhere. People are saying, well, geez, could this time be different? When we compare it to gold, as an example, with gold, you have sentiment in the toilet. We've been talking about this for months now, that where are all the retail buyers, even though the underlying characteristics, like for me, it's been, the massive buying by the central banks, right? That's certainly giving it away, so to speak. So anyways, with sentiment in the toilet right now in precious metals, and, I was scanning over Twitter, and, you get these people that are saying, oh, well, your $12 move in gold, what good does that do you? Be careful spending all your $12 in one place. This was as gold was moving up $12, comparison to, Bitcoin defying logic, defying gravity. And these people who are making these comments weren't even born probably when I started in this industry, and realize that if you make 6 or 7% per year, you are a rock star. But let's just talk about it. So in the metals market, you have sentiment low, you have the mining industry upside down distressed, and really kind of disconnected, if you will, from the price of gold and silver. Well, let's just focus on gold for a moment, where gold has been going straight up, and yet the mining shares have been horrible. The capital spending in that area is at unprecedented lows. And this is at a time when there's a massive amount of overwhelming levels, if you will, of debt worldwide, both publicly and with the governments. And when you talk about, there's been talk for years of peak gold. New discoveries are rare. And, the quantity and quality of the reserves that are already there are beginning to deteriorate. And so when you see gold moving in this light, let's also remember that gold is now rising as bond prices are falling. This is another big deal, right? And because for a long time, and this is a very significant development as far as I'm concerned, one that shouldn't be overlooked in any capacity, because for a long time, bond prices and gold have been positively correlated, where if the bond prices go up, interest rates go down, making gold more attractive, right? Because that's Gibson's paradox. Gibson's paradox is the inverse relationship between real interest rates, and we have to take
navigate through the
CPI as being legit when we know it's not, but let's just pretend it is.
It becomes
and as the price of
broader economic underpinnings
bonds have been falling,
in this chapter,
interest rates have been rising,
dance between geopolitical tensions,
and now we see gold
policies, and the resultant market dynamics that shape the landscape for silver and other precious metals. Global economic factors, notably the strength of the U.S. dollar and the Federal Reserve's interest rate policies, play a pivotal role in the valuation of silver. Historically, there exists an inverse relationship between the U.S. dollar's strength and commodity prices, including silver. When the dollar strengthens, silver prices typically fall, as the metal becomes more expensive in other currencies, dampening demand. Conversely, a weakening dollar makes silver more attractive, leading to price increases. The Federal Reserve's interest rate decisions further complicate this dance. Higher interest rates can dampen silver's allure as investors flock towards yield-bearing assets. Conversely, lower rates enhance the appeal of non-yielding assets like silver, especially when these policies are in response to broader economic uncertainties. Geopolitical tensions and economic shifts have an undeniable impact on silver's market dynamics. Events that stoke fears of economic instability or conflict can drive investors towards safe haven assets like silver and gold. These movements are not merely reactionary. They reflect a deeper search for stability in an increasingly volatile world. Furthermore, supply and demand dynamics play a crucial role in silver's valuation. Industrial demand, driven by silver's applications in electronics, solar panels, and other technologies, is on the rise. This growing industrial appetite, juxtaposed against a backdrop of constrained supply, sets the stage for potential price increases. The silver market's responsiveness to technological advancements and green energy trends underscores its unique position at the crossroads of investment and industry. This complex interplay of economic policies, geopolitical tensions, and market dynamics underscores the multifaceted nature of silver's valuation. It's not merely a matter of supply and demand. It's about understanding how broader economic narratives shape market perceptions and investment behaviors. As we continue to unravel the story of silver's potential ascent to $4,208, it becomes clear that the journey is fraught with uncertainties and influenced by a wide array of global factors. This exploration not only enriches our understanding of silver as an asset, but also highlights the interconnectedness of global markets and the myriad forces that drive them. In the next chapter of our exploration, we'll delve deeper into these themes, examining how specific geopolitical events and economic policies have historically impacted silver prices. Stay tuned for more insights, and remember to subscribe to navigate this complex journey with us. In the ever-evolving saga of silver's remarkable ascent, a critical chapter unfolds around the pivotal role of central banks and their influence on global economic trends. These financial behemoths, guardians of national monetary policies, wield considerable power in shaping the dynamics of precious metals markets, including silver. Central banks around the world, particularly in emerging economies, have embarked on a gold accumulation spree, subtly hinting at their growing apprehension towards fiat currencies amidst rampant inflation and geopolitical uncertainties. This strategic move towards gold, traditionally seen as a safe haven, has indirect but significant implications for silver. As central banks bolster their gold reserves, the spotlight inadvertently shifts to silver, raising questions about its role and value in the broader context of monetary reserves and economic stability. The increasing interest in gold by central banks reflects a deeper underlying shift towards tangible assets in an era marked by digital transactions and virtual currencies. This shift underscores a search for stability and trust in physical commodities amidst the intangible uncertainties of the digital age. Silver, with its dual identity as both an industrial commodity and a monetary asset, stands to benefit from this trend. Its industrial demand, driven by sectors like renewable energy, electronics, and medical technologies, adds an additional layer of value beyond its traditional role as a store of wealth. Moreover, the actions of central banks have far-reaching implications for interest rates and inflation, two critical drivers of precious metals prices. Lower interest rates, often implemented to stimulate economic growth, can diminish the yield on interest-bearing assets, making non-yielding assets like silver more attractive. Similarly, inflationary pressures can erode the real value of fiat currencies, prompting investors to seek refuge in tangible assets like silver, which historically preserve value over time. This intricate dance between central bank policies, economic indicators, and silver's valuation highlights the interconnectedness of global finance. As central banks navigate the turbulent waters of the post-pandemic economy, their strategies and decisions will undoubtedly influence the trajectory of silver prices. In this context, the journey towards a $4,208 price tag for silver isn't merely a speculative venture, but a nuanced narrative woven into the fabric of global economic policies and trends. As we continue to explore this narrative, it's crucial to understand the broader economic indicators and central bank actions that will shape the future of silver and other precious metals. Stay tuned as we delve deeper into the implications of these global economic policies and their potential impact on silver's ascent. Remember to subscribe for the latest analysis.
Every 100 days, we're adding $1 trillion, and $1 trillion seconds ago was 31,688 years ago. Every 100 days, we're adding $1 trillion. We're a country that has lost its bearings. And if you're not on our side, we're going to sanction you. And not just sanction you like we did Iran, but we're going to confiscate your assets to fund our agenda. Even if you don't align with it ideologically, that's too bad. And so everything we have done, as Bill says, I don't think it is too stupid to be stupid. Therefore, to me, there is a high probability. And again, this is where there's a fine line about the size of a piece of dental floss between conspiracy and reality. Could this be conspiracy? It sure sounds like it. To someone who hasn't thought about any of this stuff, they'd say, oh, he's full of crap. That could never happen. But really? I mean, look at what we're doing. We are incentivizing the world to run away from us. We are incentivizing the world to find a new standard. And then, you know, if this country was united and had its act together like we did when we were kids and our parents were running the show, the adults in the room, yeah, maybe we could pull ourselves out of this nosedive. But I wonder if we're too far down the road to do that. So, yes, I think it is very, very likely intended. Hate to say it, but if I'm being completely honest, I think there's a greater chance that this is intended than not, because now you find a villain, and when they dump the dollars and interest rates spike to high heaven, not only do you blow up the stock market, the bond market, the real estate market, but you blow up the over-leveraged banks and the over-leveraged insurance companies, which are all loaded with treasuries and bonds. And now you point to those guys that did it to us. Oh my gosh, how could they do it to us? And everyone will get behind the new system because everything blows up. Either you take the new system, which is modern monetary theory, or you starve to death. And that's how you get people who would never take it. That's how you get them to begrudgingly and reluctantly acquiesce, either that or starve. So yeah, Dunnigan, I think it's intended. Wish I didn't, but I do.
As we further explore the fascinating journey of silver's potential ascent, a significant theme emerges: the increasing call for silver to be recognized as a strategic metal. This perspective is not merely a reclassification of silver's role in the global economy, but a profound acknowledgement of its indispensable contribution to modern technology, energy, and medicine. Silver's unique properties, including its unparalleled electrical conductivity, thermal conductivity, and antibacterial qualities, position it as a critical component in a myriad of applications. From solar panels and electric vehicles to smartphones and medical devices, silver's utility spans across industries that are pivotal to our contemporary lifestyle and the green revolution. This broad spectrum of use underscores a growing realization: silver is not just a precious metal or an industrial commodity, it is a strategic resource that is central to advancing sustainable technology and healthcare. The call for silver's recognition as a critical mineral comes at a time when the world is increasingly focused on sustainable development and energy transition. Governments and corporations alike are investing heavily in green technologies, aiming to reduce carbon footprints and combat climate change. Solar energy, a sector heavily reliant on silver, is at the forefront of this transition, with countries around the globe ramping up their solar capacity. The demand for electric vehicles, another significant consumer of silver, is also surging, further emphasizing the metal's strategic importance. This growing demand for silver, driven by its critical role in sustainable technologies, is juxtaposed against concerns about supply constraints. Unlike other commodities, silver's supply is not easily ramped up. The majority of silver production is a byproduct of mining for other metals, such as lead, zinc, and copper. This means that the supply of silver is not solely responsive to its own price or demand dynamics, but is influenced by the broader mining industry's economics and priorities. The recognition of silver as a strategic metal could have profound implications for its market dynamics. It could lead to increased government and private investment in silver mining and recycling, enhancing supply security. Furthermore, it might influence national policies, encouraging the stockpiling of silver as a strategic reserve, much like oil or gold, to safeguard against potential supply disruptions. As we delve into this pivotal aspect of silver's story, we're reminded of the delicate balance between its monetary heritage and its industrial future. The push for recognizing silver as a strategic metal is not just about securing its supply, but acknowledging its indispensable role in shaping a sustainable and technologically advanced future. In this chapter of silver's unfolding story, we stand at the intersection of economics, technology, and sustainability. As we continue to explore the implications of silver's strategic status, stay tuned for further insights into how this evolving narrative could influence its journey towards the speculated price of $4,208. Remember to subscribe to stay informed on the latest developments in the captivating world of silver and its impact on the global stage.
And think about this too. You know, your roots in this on YouTube is in preparation, right? Reluctant preppers, and in someone who prepares. Listen to what they're doing, right? I'm sure you've read this, but I'm just going to read you two paragraphs here. On Sunday night, congressional negotiators revealed a bill which would fund key parts of the government through the rest of the fiscal year, which began in October. The 1,050-page legislation sets a discretionary spending level of $1.66 trillion for year 2024, which comes just days after lawmakers passed the fourth stopgap measure since October 1st to keep the government funded a bit longer. The entire U.S. 1 million barrel Northeast gasoline supply reserve will be required to be sold and the entire reserve infrastructure closed in fiscal 2024 in order to fund this. So they're taking 1 million barrels of oil that were held, and they built this storage facility after Hurricane Sandy for emergencies, for things that you should prepare for. Well, they're pillaging it right now and selling it just to keep the lights on for a little bit longer. And not only that, they're mothballing the entire deal. They're not going to fill it back up. So we are putting ourselves not only socially and morally and spiritually and religiously and everything that means something to this country. That's what we stood for. We're also putting ourselves at a horrible state of preparedness with open borders and 12 million people here illegally. We're getting rid of our strategic stockpile of oil. We're massively indebted. I mean, the whole thing, you couldn't make it up. We are not in a position to fight back and to stand up. And it to me is the most troubling part of all of this. But I think it's all connected. I do. And I think that's how diabolical they are, to realize that if you reset the system, you have to inflict enough pain to where people say, I'll take the new system. Let's go. We got to.
Venturing deeper into the intricate narrative of silver's ascent, we now turn our focus to the myriad predictions and analyses offered by experts and analysts across the financial spectrum. These forecasts not only offer a glimpse into the possible future of silver prices, but also reflect the diverse factors that could influence its trajectory toward the unprecedented figure of $4,208. First, let's consider the viewpoints from prominent financial institutions and analysts who have been closely monitoring the silver market. Predictions for silver in 2024 vary widely, ranging from modest increases that follow historical trends to bold forecasts that envision a dramatic surge in prices. For instance, InvestingHaven.com posits a bullish outlook, suggesting silver could hit between $34.70 to $48 by mid-2024 or mid-2025, driven by a combination of strong industrial demand and investment flows. Similarly, J.P. Morgan anticipates silver prices averaging around $30 per ounce, supported by expectations of a Fed cutting cycle and falling U.S. real yields pushing gold, and consequently silver, to new nominal highs. Commerce Bank and Citigroup echoed this optimism, projecting silver to reach or exceed the $30 mark by the end of 2024. attributing this potential rise to a decrease in the gold/silver ratio and supportive macroeconomic factors. These predictions underscore a consensus among several analysts that silver's future is bright, buoyed by both its monetary appeal and indispensable industrial uses. However, it's the outliers in these predictions that draw the most attention. Robert Kiyosaki, a well-known financial commentator, offers a staggering forecast, suggesting silver could skyrocket to $500 by the end of 2024. While such a prediction far exceeds the consensus range, it highlights the speculative nature of precious metals markets and the wide array of factors, including monetary policy, technological advancements, and geopolitical tensions, that can influence prices. The basis for these optimistic forecasts lies in several key drivers. The industrial demand for silver, particularly in the renewable energy sector and electronics, is expected to soar as the world increasingly adopts green technologies. Additionally, investment demand for silver as a hedge against inflation and currency devaluation continues to strengthen, especially in an era of low to negative interest rates. Experts also point to the potential for a significant supply deficit. With silver mining production growing at a sluggish pace and many silver mines nearing the end of their life cycles, the gap between supply and demand is expected to widen. This supply-demand imbalance, coupled with increased investor interest and industrial usage, lays the groundwork for potential price increases. In navigating through these predictions, it's crucial to remember the inherently volatile and unpredictable nature of commodity markets. Factors such as technological breakthroughs in silver recycling, changes in monetary policy, and shifts in investor sentiment can all play pivotal roles in determining silver's price trajectory. As we ponder the array of expert opinions and analyses, the path to $4,208 remains fraught with uncertainties and speculation. However, one thing remains clear: the journey of silver is a multifaceted tale woven from the threads of economics, technology, and global finance. Stay with us as we continue to explore this fascinating narrative, and don't forget to subscribe for the latest insights and developments in the world of silver.
Insurrection. They're waiting for the people to be so pissed off that they revolt, and just like they did Marie Antoinette, hopefully they don't drag Paulson out in the street and behead him. But that's what the environment we've created, the divisiveness, the anger, the hatred, red and blue and black and white and vaccine and no vaccine. And, the whole thing where I was flying back last night from Florida to Florida from Wisconsin. And when I landed yesterday afternoon, I could see the people who are watching TV on the airplane, on the back of the seats. And as we were landing, getting into Palm Beach, Trump came on to speak of the 9-0 decision of the Supreme Court in his favor, and as they should have, no matter what side you're on. I mean, no one state should be able to determine the election for the whole country. But anyways, it was very interesting. Half of the first class was watching Fox, and the other half, in essence, was watching CNBC. I mean, that's pretty much all that was on. They're watching Fox or CNBC. And as we're landing, Trump starts to speak. And Fox is broadcasting the entire thing. And it was nowhere to be found on CNBC. I could see both TVs and nowhere to be seen. And so it's like they're not even telling the public what's going on. They're not presenting an accurate story. There's so many people who are not aligned with the things that we talk about simply because we have a media that has chosen sides and is not giving a balanced view. The journalistic integrity or investigative journalism is gone. And that's why people need to be watching YouTube to get real information that people like you and I work our butt off to try to find and present in a manner that it hopefully opens people's eyes, because, and one of the things that Matthew Piepenburg said on that interview with Elijah, one of the last things he said is, fact check what I'm saying, fact check what everyone is saying. So I'd like people to fact check the things I say. I tried damn hard to make sure that they're right. And I'll tell you, Dunnigan, I think that things are going to get real interesting as we get into March 11th, as we get to the end of the bank funding program, and as we start to get closer and closer and closer to the election. Let's not even forget about the 200 BRICS meetings leading up to the big one in October this is going to be one heck of an interesting ride between now and fall. And I'm sure every Tuesday there'll be more and more to talk about. I could keep going for the next hour if you want, but I know that won't work. I do know that there'll be a lot more to pick up with where we left off next week.
As we navigate through the labyrinth of factors influencing silver's potential to soar, a pivotal aspect emerges: the catalysts that could propel its value to unprecedented heights. These catalysts, often unpredictable and diverse, are crucial in transforming speculation into reality. They embody the convergence of economic, technological, and socio-political forces, each capable of triggering a seismic shift in the silver market. One of the most potent catalysts is technological innovation, particularly in sectors with heavy silver usage, such as renewable energy and electric vehicles (EVs). A breakthrough in solar panel efficiency or a surge in EV production can dramatically increase silver demand overnight. As nations commit to greener futures, policies promoting these technologies could serve as a significant demand driver for silver, pushing its price upwards. Another critical catalyst could be shifts in monetary policy and investor sentiment towards traditional financial systems. In times of economic uncertainty or inflationary pressures, investors often turn to precious metals as safe havens. A loss of confidence in fiat currencies or a major financial crisis could see a flood of investment into silver, both for its role as a store of value and its industrial applications, thereby elevating its market price. Furthermore, geopolitical tensions and supply chain disruptions can play a significant role. Silver mining and refining are concentrated in a few countries. Any political instability, labor strikes, or regulatory changes in these regions could impact silver's supply chain, leading to sharp price increases. Similarly, trade policies and tariffs can influence silver prices by affecting its global supply-demand balance. The potential for a significant market recalibration also exists with the increasing awareness and advocacy for silver as a strategic metal. Should governments and industries begin to stockpile silver in anticipation of future shortages, this could create a self-fulfilling prophecy, driving prices up as available supplies diminish. It's essential to understand that while these catalysts hold the potential to push silver prices to new heights, the journey is fraught with volatility and uncertainty. The interplay of these factors, combined with market speculation and investor behavior, makes the precious metals market, particularly silver, highly unpredictable. As we speculate on the road to $4,208 per ounce, it becomes clear that the journey is not linear, but a complex interweaving of diverse and dynamic forces. The catalysts for such a monumental rise in silver's value are not confined to single events, but are part of a broader narrative encompassing technological progress, economic policies, and global shifts in demand and supply. In concluding this exploration of potential catalysts, we are reminded of the intricate balance that governs commodity markets. The path to $4,208 is speculative, yet it underscores the profound impact of external forces on the valuation of precious metals like silver. As we continue to witness the unfolding story of silver, stay engaged for further analysis and insights into this fascinating market. Remember, the world of commodities is ever-changing, and the next chapter in silver's saga could be just around the corner. Don't forget to subscribe to stay informed on the latest developments.
Right. Well, the people that know better wouldn't take it because of all the things you just said. But if you're forced to take it because everything that you value as wealth is now vaporized, yeah, you're going to take it. And I think that's really always been the question. How do you get people to take it? And I think we are well on our way to getting to that point where, look, you could say we've already lost faith with a good deal of the world, and let alone half the country. And so we're in a place right now that I think is ripe for that type of a move. And I don't know about you, but every day we get closer to the election, I'm waiting for something to happen. And I'm not just saying a terrorist attack or anything like that, but something. Banking system. Look, March 11th, everyone's talking about the funding program, March 11th, that ends. Yeah, that means they're able to write loans up until March 11th and then no more. But I mean, after a few weeks past March 11th, the majority of the loans that were written at the time the banks were really distressed, well, those come due. What's going to happen? Are we going to see a bank failure? And if we see several bank failures, will one of them be bailed in like the Dodd-Frank law suggests is law? Or are they all going to be gobbled up by J.P. Morgan in a consolidation effort? As Powell told us, a lot of these regional banks will be consolidated. But look at some of the properties that are selling right now for pennies on the dollar. Two very large buildings in San Francisco that are owned by let's see here. They are owned by the Paramount Group they're now writing off for $1 or nothing, zero. They were bought for, hundreds of millions of dollars, two giant buildings that have been there forever, written off because the cost of maintaining it and paying for it and the loan is worth way more than the buildings are worth. They're just walking away from it. That's just one example. You're seeing that all over the place. And the regional banks are the ones that hold all of these commercial real estate loans. We're getting to that moment. And all it will take will be for one bank to fail and be bailed in, for the people to wake up, because nobody knows what the heck a bail-in is. Yeah, your listeners do, but I bet you not everyone who listens to you does. It's one of these deals that they slid in that, there's $7 trillion of uninsured deposits in the banking system. We're sitting on a powder keg. And the question is, what lights it? I don't know, but I think that there will be something that sets the fuse off here before too long. And if not, like Bill said, this entire setup is just too stupid to be stupid. So, yeah, I'm waiting for something to happen to shake up the...
In our exploration of silver's remarkable journey, we have traversed through historical trends, expert predictions, and potential catalysts that could vault its price to an astonishing $4,208 per ounce. Now we arrive at the apex of our narrative, where we attempt to synthesize these elements into a cohesive conclusion that not only answers how silver could achieve such a monumental rise, but also what it signifies for investors and the global economy. The potential surge in silver's value to $4,208 rests on a confluence of factors, each interlocking and amplifying the others. The industrial demand for silver, fueled by its indispensable role in green technologies, electronics, and medical applications, stands as a primary driver. As the world accelerates its transition towards renewable energy and sustainable solutions, silver's demand is poised to skyrocket, driven by its unmatched conductive properties essential for solar panels, electric vehicles, and numerous technological innovations. On the supply side, the scenario is equally compelling. Silver's production, largely a byproduct of mining for other metals, faces significant constraints. The lag in opening new mines, coupled with the depletion of existing ones, forecasts a tightening supply that could struggle to meet the burgeoning demand. This supply-demand imbalance is a classic recipe for price increases, potentially propelling silver to unprecedented levels. Adding to this mix is the investment demand for silver, which swells in times of economic uncertainty and inflationary pressures. As investors seek safe havens from currency devaluation and market volatility, silver, with its dual appeal as both an industrial metal and a store of value, becomes increasingly attractive. This investment demand can create a feedback loop, driving prices higher as more investors flock to silver, seeking both protection and potential profits. However, the journey to $4,208 per ounce is not without its challenges and uncertainties. Market dynamics are inherently unpredictable, influenced by myriad factors from geopolitical tensions to technological breakthroughs and changes in fiscal policies. The speculative nature of such a price target also means that investor sentiment and market speculation could fuel volatility, making the path to such valuations erratic. In conclusion, while the projection of silver reaching $4,208 per ounce is speculative, it is not without basis. The underlying factors of industrial demand, supply constraints, and investment appeal provide a compelling narrative for silver's potential rise. However, investors should navigate this landscape with caution, mindful of the market's complexities and the uncertainties that lie ahead. As we close this chapter on silver's fascinating journey, it's clear that its story is far from over. The forces shaping its market are dynamic, reflecting broader economic, technological, and geopolitical trends. For those watching closely, silver's journey offers not just an opportunity for investment, but a window into the future of our global economy. Remember, the world of precious metals is as intriguing as it is unpredictable. Keep an eye on the developments, stay informed, and most importantly, approach your investment decisions with knowledge and prudence. Thank you for joining me on this exploration of silver's potential ascent. Don't forget to subscribe for more insights into the markets and the forces that shape them. As we conclude our comprehensive exploration into silver's potential ascent to $4,208, it's crucial to weave together the myriad threads we've uncovered. This journey has taken us through the metal's historical performance, the critical factors influencing its market, and the speculative yet fascinating pathways that could lead to such an unprecedented price level. Our final step is to encapsulate this exploration with a reminder to our audience and a reflection on the broader implications. Remember, while the speculation around silver reaching $4,208 $208 per ounce is grounded in a combination of solid market analysis and forward-looking projections. It remains a speculative endeavor. The dynamics of the silver market, like any commodity market, are influenced by an intricate interplay of supply and demand, geopolitical tensions, technological advancements, and investor sentiment. These factors, while providing a basis for optimistic projections, also introduce a degree of uncertainty and volatility that cannot be overlooked. Investing in silver, or any precious metal, requires a nuanced understanding of these market dynamics and an appreciation for the speculative nature of such investments. It's not merely about riding the wave of market trends, but understanding the underlying forces that drive these trends and being prepared for the potential risks as well as the rewards. As we part ways on this exploration, let me reiterate the importance of diligence, research, and a balanced approach to investing. The story of silver is emblematic of the broader narratives that shape our global economy, an interconnection of technological progress, sustainability goals, economic policies, and the ever-present search for value and stability in turbulent times. So to all aspiring investors and curious minds, let this journey into the potential of silver serve not just as a guide to speculative investment, but as a lens through which to view the complexities and opportunities of our modern economic landscape. Stay informed, stay engaged, and most importantly, approach your investment decisions with a blend of caution, curiosity, and a deep understanding of the market dynamics at play. Thank you for joining me on this intriguing exploration. The journey of silver, with all its potential highs and lows, serves as a vivid reminder of the fascinating, often unpredictable nature of commodity markets. As we look to the future, let's continue to seek out knowledge, question assumptions, and explore the possibilities that lie ahead. Subscribe for more insights and analyses, and together, let's navigate the ever-evolving world of finance and investment.